investing your money, right? This is a big deal. This is something that you really need to put some thought into, and all investing comes with some degree of risk, right? So it's important to know the pros and cons of what you're investing in and what the different options are for you to invest in. So today we're going to talk about several different uh, vehicles for investing your money and some of the pros and cons that go along with those. So, pros and cons to investing in the stock market. We're all familiar with how stocks work. We're usually looking to buy low and sell high. The biggest pro about investing in stocks is that it's typically going to be a good return on your investment over the long haul. Uh, Over the long history of the stock market, when you look at that graph over a long period of time, from start to finish, you're usually looking at an increase on that graph. So as long as you understand that this is a long-term investment, the odds are that you're going to make money on that investment. What can be difficult about the stock market is that you're going to have those fluctuations in price. So it's a little bit unpredictable, and you never know when it's going to go up and go down. And when it changes, it usually changes dramatically, not slowly, where you can kind of grasp what's happening before it happens. So next is bonds. Let's talk about the pros and cons of investing in bonds. So number one, it's going to be less volatile. You're going to have less fluctuation and less dramatic change in the value of the bonds. It's more the income's going to be more stable, and it provides you with more liquidity. The cons are that you're going to have a lower return on your investment over the long term. So it's more stable, it's more certain than stocks, but you're not going to see as big a gain over the long term of that investment. And the other issue that you want to be worried about, especially in today's age, is interest rates. Interest rates really affect the value of bonds. As interest rates go up, like we're seeing right now, the value of the bonds go down. So let's talk about mutual funds. The pros to investing in mutual funds really is that you have a professional manager, someone who has the expertise and has already done the research investing your money. Uh, the con to that, though, is that you have high fees and expenses associated with that management. So it's important that making sure that your benefits of investing with someone who knows what they're doing isn't being offset by the fees that they're charging you. So it can be a great place to diversify your investments, making sure that it's spread over different industries and companies. But you want to make sure that the fees and expenses associated with it aren't going to negate those benefits. All right, let's talk about real estate. First, let's talk about the pros and cons of investing in single family homes. Number one, you have lower upfront costs. Tenants are typically going to stay longer. You're going to have longer term leases in a single family home. And then the operating costs and the overall management of single family investments are going to be lower. So it's just a less intensive business to run. The cons to investing in single family homes are that your financing is based on your personal income. So to try to scale from 1 to 2 to 3 to 4 homes, to try to build your portfolio, if you don't have a very large personal income, it can be difficult to continue to get financing on more and more homes. It's also difficult to scale. Your homes are going to be spread out at least to some degree. So you're going to have travel time from one to another. It can be difficult when you face vacancy. So the impact of losing a tenant is going to be higher, because if you have a single home that you're renting and you lose that tenant, you immediately go to 100% vacancy. You're putting yourself at a lot higher risk of losing that investment to foreclosure, because you don't have the income. And then the value of that property is uh, based solely on sales comps. So you don't have much control over the value of that property. It's just based on where it is and what the sale of similar homes in the area go for. So you don't have much control over over your investment. All right, so now let's talk about multifamily. What are the pros and cons of investing in multifamily real estate? So number one, the financing uh, is much different than uh, qualifying for a loan for a single family home. So with single family, we need to qualify based on our personal income. With multifamily, it's actually based on the rent potential. So the bank is much more interested with how how well can this business perform, and what type of revenue can it create to ensure that we're going to be able to pay the mortgage. We also have much more control over the value of that asset. So with single family homes, the value of that house is determined by its location and what similar properties sold for in that area. We don't have much control over. We can't drive that value up based on our actions. Um, with multifamily, we have much more control, so we can come in and do value added renovations. We can renovate the inside of the units. We can add amenities that weren't there before, and all these things help to raise that rental income. We can charge more rent for an updated unit, a community that has much better amenities, and so raising that rental income also raises the value of the property. So we have much more control over increasing the value of the property. We also have the power of economies of scale. So just the fact that you have multiple and many units under one roof allows you to have savings over so many different things in the business. You're not spread out so much when you're trying to grow a portfolio of single family homes, when you can just have all those units consolidated in one area. Economies of scale are very very powerful for you. And one of the huge pros to investing in multifamily is that um, vacancy has less impact. So when a single family unit loses a tenant, the uh, vacancy goes straight up to 100%. If we have a 100-unit apartment building and we lose a tenant or even a few tenants, the rest of the property is able to compensate for some vacancy. So you're not at risk of not being able to make your mortgage payment just because you lose a few tenants for whatever reason, um, as opposed to single family where it could be very catastrophic for you. So you have that built-in protection for your income. Now, what are the cons of investing in multifamily real estate? Well, there's much higher costs up front, right? I mean, the property is going to cost a lot more. You may need many people pooling their money together. So there's a coordination there that is different from investing in single family homes. And then just the management is more intensive. You have a lot more tenants. You're going to have more of a staff, a full-time staff of, office management as well as maintenance. So there's a little bit more to it. It's more time consuming. You've got to have a better control over the entire operations when as opposed to single family homes where you may be able to do it in more of a part-time role. Managing a apartment community is going to be a full-time job if you're actively investing in it. So again, investing in anything is going to come with risks. So make sure any investments that you're involved in that you're vetting who you're investing with, what you're investing in, and that you understand what the risks are. Uh, Ask questions. Make sure that you are fully aware of the entire operation. Who's running what? Who is responsible for what? How are they going to be held accountable? Make sure that any risks that are potentially out there, that there are things in place to mitigate those risks. And we'll talk more about that in another video, but make sure that you really have a trusting relationship with those that you are investing with. And I think that's a really special thing about investing in multifamily syndications is that it's all about relationships, and we really get to know those people that we invest with. And if you're not getting to know them, you really should understand who you're investing with, understand and ask the questions about who's doing what. And if you're not getting answers, that's a big red flag. Uh, Transparency is very important, and not everything's going to be perfect. But if you have people in place who are willing to do whatever it takes to protect their investors and do the right thing, doing the right thing is always the right thing to do. So make sure whoever you invest with, whatever you're investing in, has the risks mitigated, have great benefits for you, and that you can trust that the people that you're working with are going to do the things that they say that they're going to do. Okay? Pros and cons, weigh your options, and then take action. All right, I'll see you guys soon.